Hello, everybody out there. How are you all doing? I'm Kate Hill, bringing you unbiased and honest content on property, along with fantastic hints and tips. Stay tuned today for all your latest property news. Vacancy rates remain exceptionally tight across Australia, having fallen to just 1% in January, marking a significant decline of 0.5% during a typically busy month in the rental market as workers and students relocate for the start of the business and school year. According to SQM research, this drop means that there are only 31,800 rental properties currently available. The managing director of SQM research anticipates further tightening in the rental market. He notes that while there seem to be signs of easing vacancy rates at the end of 24, indicating a potential end to the rental crisis, this situation has drastically reversed. He emphasises that the rental vacancy rates are now at some of the worst levels seen throughout this crisis. Hobart posts a strikingly low vacancy rate of 0.3%, the lowest on record since 2005. Smaller capital cities are also feeling the strain. Perth has a vacancy rate of 0.4%, Adelaide 0.5%, Brisbane 0.8%. Other notable vacancy rates include Darwin 1.1, Canberra 1.3, Sydney 1.4, Melbourne 1.5. Despite these tightening rates, the median weekly asking rent for houses has remained steady at $718, while rents for units have decreased very slightly by 1.2% to $557 a week. Professionals in the real estate market are increasingly optimistic about property price growth in 25. CoreLogic's 2025 outlook indicates that 65% of real estate agents expect prices to rise this year, up from 57% at the same time in 24. CoreLogic believes that the Melbourne market will perform better in 25. Melbourne has established an affordability advantage and could see improved capital growth this year, driven by lower interest rates, higher real incomes and better affordability, they have explained. The recently released Q4 of 2024 APIM Property Sentiment Survey report also highlights a growing interest in the Victorian property market. Victoria ranked as the second most popular state for buyers over the past year, just behind Queensland. The report further states that Victoria is also second to Queensland when it comes to property investment prospects for the next 12 months. Out of the respondents, 345 chose Queensland as the top state for investment, while 20% selected Victoria, 18% opted for WA, and 13% picked New South Wales. Regional property markets are still thriving, with some recent data indicating quicker value growth compared to capital cities. In the last 3 months, up to January, about 72% of regional suburbs saw rising property values, while only 51% of capital city suburbs experienced similar growth, according to CoreLogic. CoreLogic attributes this shift to affordability issues, pushing buyers to regional areas. As more individuals seek affordable options, it's unsurprising that demand has increased for these properties, particularly in the lower price quartile, with values expected to rise by over 9% in the coming year. The trend reflects a lasting change in work dynamics as remote and hybrid jobs allow people to prioritise lifestyle over location, resulting in higher internal migration to those regional markets than we've seen before, and certainly the pandemic, which is obviously bolstering demand for housing in those areas. A new ban on foreign buyers purchasing existing Australian homes, effective from April the 1st, 25 to March the 31st, 27, has generated significant criticism due to perceived loopholes. This ban, initiated by the Australian Labor Party, is aimed at addressing housing shortages, but is viewed as irrelevant by experts because many foreign buyers are now Australian citizens or residents. Experts stress that the number of new houses approved is insufficient for the increasing number of migrants, worsened by high immigration levels, obviously since COVID, which contribute to the housing crisis. Industry insiders predict that the ban will have a minimal effect, potentially impacting fewer than 10,000 new homes and about 1,600 property transactions annually. Many so-called foreign investments come from migrants who have actually become citizens, and thus rendering this ban really largely ineffective. And on top of that, the ban will actually hinder redevelopment projects that are essential for increasing housing supply. Some notable shifts in buying behaviour have emerged, with Chinese, for example, families assisting their children in property purchases within Australia, reflecting the bank of mom and dad trend common in the country. The ban allows for certain exemptions, such as investments that significantly increase housing supply and for participants in the Pacific Australia Labour Mobility Scheme. Despite the ban, there are reports of foreign buyers bypassing restrictions by channeling funds through their resident children, indicating ongoing strategies to navigate these new regulations. Overall, the reality is that the level of foreign investment really is relatively small in comparison to the total Australian residential real estate market, and this makes the whole thing nothing more than a politically motivated statement, because it makes them look like they're actually doing something. It shows little, as usual, little understanding of how Australia's housing market actually works and what is driving the current shortage. I will keep you posted on all things property from around Australia as we progress throughout our year. Don't forget to hit like and subscribe, and I will see you all again really soon. Bye.